Welcome to today's show. So today we're talking about BM&R and Ethereum, why people are talking about this $40 price point on January 16th and potentially higher, what this has to do with call options, and I'll explain it in English, what it has to do with the ratio of the put to call ratio and what that really means, and how much Ethereum BM&R actually holds, and why big money is moving on to Ethereum, who's moving on to Ethereum, and what could happen if BM&R starts staking Ethereum in 2026. So let's get rocking and rolling. Let's go. Not tax advice, not financial advice, not legal advice. Do your own research. If you want my book, Money Game, you can grab it down below and snag it with my free trading strategy on how I'm trading on a daily basis. All right, so let's jump into the game here. All right, so if you're new to the channel, I talk about BM&R quite a bit. I've been in BM&R for about 4 to 5 months myself. I own the stock, and it's basically a public stock that acts like a giant Ethereum treasury. So what does that mean? They own a lot of Ethereum. Tom Lee is the mastermind behind this with Fundstrat, and they've been accumulating a lot of Ethereum this year, in case you haven't noticed. Recent announcements show they have about 3.97 million Ethereum. And total cash plus crypto is around 13.3 billion. They're also edging up beyond 3.2%. That was the recent announcement on December 15th in terms of the ETH supply that they own. They're pushing closer to 4% soon, and their goal is to get to 4% of the supply. So where is BM&R trading right now? Well, we saw about a 10 or 11% jump on Friday. They went to $31.36. We watched it run all the way up when the interest rate cuts happened. It was priced in, and it ran all the way up to over about 42, and then it dropped all the way down to 28. So this stock is extremely volatile. It moves like lightning speed, and you have to understand that. And so multiple data sources on BM&R have the market cap sitting around 13.3 to 13.4 billion. So if the company is saying that their crypto plus their cash is about 13.3 billion, the market is basically pricing it like 1-to-1. So you'll hear this term thrown around a lot with BM&R and also companies like MSTR of MNAV. In plain English, it's basically saying that BM&R is being priced around 1-to-1 with what they hold. So the question with MNAV is how expensive is the stock compared to the crypto pile behind it. So for example, with BM&R, they have their crypto pile, which is Ethereum. If the stock is trading beyond that, it's trading at a premium. Same thing with MSTR. Their crypto pile is Bitcoin when it's trading above the net asset value of their Bitcoin, or in this case, BM&R's net asset value of their Ethereum. When it's trading above that, the stock is trading at a premium. And these digital asset treasury companies can typically command a premium in the marketplace when the stock market or crypto is actually bullish. When it's bearish, it drops super, super low. And we've seen with MSTR recently how low it's dropped below a 1 MNAV. And BM&R is approximately around a 1 right now. When BM&R was running up to 42 the other week, it was about a 1.3. So in the future, if we see some bullishness from BM&R, in 2026, the MNAV will probably get up around 1.5 or even more if we go really bullish. So we'll see if that actually happens, which is good for people in the stock because you can see like parabolic moves in the stock and with the volatility and also the fact of what I just explained. So let's talk about the $40 strike price right now, what that actually means. So breaking this down in very simple language, I don't play with calls and puts, but I'm going to break this down because it's very, very relevant. TC, what's going on, my man? So it's very, very relevant to what we're talking about here today of why the price could go over 40 on January 16th. Here's why. And there's a possibility, Ken, I'm not saying it will do that, but let's look at the data to see where it's going. And if you're trading the stock like I am on a daily basis, I'm interested in this data of where the stock's going to move in the short term. So a $40 call option is basically a bet that says, I want the right to buy BM&R at $40 before a certain date. That's what a call option is. If BM&R is below $40, that option is mostly just a lottery ticket, okay? If BM&R goes above $40, that option becomes valuable to the person who bought the call option, the option to buy it, right? because the buyer can buy, they have the option to buy at $40 and immediately have the stock, own the stock that's worth more than $40. So a call option is an option to buy. And that's basically as simple as it is. Now, why call options can push the stock up? Here it is in plain English. Lots of people buy call options. So we're seeing this with lots of call options for BM&R right now. All right. The firms that sell those call options. So for somebody to buy a call option, somebody needs to sell it to them, right? So the firms that sell those call options, they don't want to get crushed if the stock jumps up, right? So the person who buys the call is like they're betting that it's going to go up. The person who sells the call is thinking it's going to go down. So the firms that sell the call options, they don't want to get crushed if the stock goes up and jumps. So as the stock climbs towards $40, which is where a lot of these call options are sitting right now, those firms often start buying shares ahead of time so they don't get caught like naked with their pants down, right? Because they're like, oh my God, if the stock starts going close to 40, the person who has the call option is excited because they're like, I get to own the stock at $40, right? The person who sold the call option to them doesn't want that to happen. And if the stock keeps rising, the person who sold it to them often has to buy more shares because now the risk of getting hit on this is bigger. So for the person who sold it, the risk is bigger. So when there's a huge pile of call options out there for a certain date, which there is for BM&R, okay, it can create extra buying pressure as the prices rise. So that's the option kind of pressure story. So basically, what'll happen is like the person who's actually sold the call options, when the day comes where it goes above 40 and that person's like, hey, we bought the call option. They're like, I'm buying that sucker. I want to buy that stock. The person who sold the call option to them is obligated to sell it to them. And that means they need to hold the shares to actually sell it to that person. And to hold the shares, they need to buy the shares. So as it's getting closer to 40, they're going to buy the shares because they're going to have to eventually cover and sell it to that person. And then if it goes above 40 or 41 and 42, they're like, somebody's going to exercise these call options and want to buy it from me, buy the shares from me. I need to be holding the shares to sell to them. So they keep buying more shares and keep buying more shares as the stock price goes up. And that buying pressure pushes the stock price of BM&R up. All right. So that's why I could hit 40 and go beyond, and we could see it turbocharge a little bit up. So that's the basic story on it. Now, you have like a put to call ratio, which right now basically says that there's more people that are bullish. There's more people that are buying calls than puts right now. So the overall scenario when you look at BM&R through January is that more people are betting that the stock is going to go up than go down. Okay. Puts are a bet that it's going to go down. Calls are bets that it's going to go up. All right. So are traders leaning bearish or bullish? They're leaning bullish on this right now. All right. So, and then if you look at January 16th, which is the date, there's very large open interest right now, open call interest. So a big pile of call bets is just sitting there on January 16th. So let's see what happens. If we start pricing, pushing up towards $40, there could be some serious movement in the price going up. Okay. If you look at the 200-day moving average right now of BM&R, it's sitting right around $29 price point. We just bounced off of that. So it literally went down, bounced off of it, shot up to 31 and change, about 10% or 11% on Friday. And that's basically what's happening right now in the short term. Now, if you've been following this channel or watching me, you know that I'm super bullish about BM&R in the long term. I hold the stock. I've been holding it through the ups and downs, but I do trade it on a daily basis because when the stock goes down, I want to pick up more shares. So I'm definitely a long-term holder of BM&R, but the stock goes down, I sell out high, I buy back low, I pick up way more shares. This week so far, I picked up 10% more shares this week. I was up 21% this week, and then I made up a really bad trade on Friday and lost about 11% of my gains. So I netted this week 10% more shares. All right. So in trading, sometimes you win, sometimes you lose, but the game is to win more than you lose. And so if you want to learn that, you can grab my free video down below and my book if you want to learn more about that. Okay. So that's the gist of what's going on with the short-term price of BM&R. Watch for $40 around January 16th. Watch for the price potentially inching up towards that and moving up towards that. Again, not a crystal ball. I wouldn't bet my future on it, but as I'm trading in the short term, I'm paying attention to this data because it's data and it's true and it's real, and we'll see what happens. Now, why is Ethereum overall, if we zoom out and we look at the long-term hold of the stock, BM&R, which holds a lot of Ethereum, we know they're going to get to 5% of the supply. That's a layup. I'm thinking more that BM&R will eventually get 10% of the supply over the long term. So if we look at this, we look at a company that really plays a big role in the infrastructure of the blockchain now because they own Ethereum and they own a huge amount of the supply of Ethereum. And so that means that they play a very, very influential role in the blockchain infrastructure. And because Tom Lee is so connected in Wall Street and he's in the ears of so many of these players on Wall Street, it's kind of like this movement together where Tom made a really smart move and bought Ethereum to put on BM&R's balance sheet. And now Wall Street is also moving to where the blockchain is because they have to move onto the blockchain because it's faster. The settlements instead of 2 days or 3 days when you're trading a stock is, instant. It's more secure. You can send money across borders in seconds with lower fees. So it's just a more superior technology. So there's no question that Wall Street is going there. And I'll share with you right now the companies that are actually moving on there. So that's why long-term for me, BM&R is an incredibly smart bet over the long term. So what I was just sharing with short-term prices, because I trade BM&R, I'm also interested in where the price is going to go in the short term. Who isn't? But I'm also looking long-term over the next 4 or 5 years. Why is BM&R such an intelligent bet? And none of this is financial advice or tax advice, but I'm just going to walk you through. Here's where the smart money is. If you watch my channel before, you've seen me talk a little bit about this. So JP Morgan is launching tokenized products that live on Ethereum, including a tokenized money market style fund called Money, M-O-N-Y. So you got JP Morgan on there, okay? You got BlackRock. And it's no secret that BlackRock has become like the raving fan in the space because they have the IBIT ETF. But BlackRock has fully come out with, public news that like tokenization is literally going to take over the world. And so we have BlackRock fully behind this. So when you look at the power that's behind the blockchain and behind Ethereum, there's one smart option, which is BM&R is the smart option. Okay. Now in the short term, it's volatile. It's a roller coaster. It's crazy. I'm not saying anybody should buy it. I'm just saying you should watch and pay attention to the stock. I'm buying it because I've been in Bitcoin since 2018. I bought into strategy in early 2024. So even with the dips, I'm still very profitable on strategy. So I'm just holding stocks like BM&R and MSTR and Bitcoin, but I'm also trading BM&R. Okay. And I want to accumulate more shares and I want to own more of this stock into the long term because of this overwhelmingly just the indication of where institutions are going. Deutsche Bank, they've published materials like written documentation saying that they're really looking into the tokenization infrastructure tied to Ethereum. Okay. PayPal continues pushing their stablecoin, which is PYUSD, and expanding its usage in payments, settlement style workflows, right? So basically, Ethereum's becoming the settlement layer. If you really look at PayPal, and I've talked about this on other shows, but we use PayPal, but you don't see what's going on behind the surface on PayPal. It looks like you're getting your money instantly, but behind the scenes with PayPal, there's settlement, and settlement takes time. All right. And so when you're on the blockchain, if settlement is instant, do you know how much money these companies save by having settlement instant rather than sitting and waiting on money for 2 or 3 days? If you're trading in billions and billions and billions of dollars and you're saving 2 to 3 days of settlement and it's seconds, you're earning so much more on your money and you have so much more liquidity of your money and so much more movement of your money. So it is not like a thing of will Wall Street go on there? They're already on the blockchain. They're already going there. BlackRock is already on there. Okay. PayPal is already on there. So this is just this is the game and this is what's happening. Now, if you don't think that this is news, let's get in even thicker here. Okay. So I call this the scoreboard company. You'll know about it in a second, but it's called the DTCC. I'll put it in English in a second. It's the Depository Trust and Clearing Corporation. Basically, it's the big back end infrastructure that clears and settles tons of traditional markets. And we're talking like $100 trillion, $200 trillion. So you have the DTCC, it clears trades, right? So it clears trades, it settles trades, and it keeps master records of all the stocks, all the bonds, all the ETFs. This is literally like the gatekeeper, okay? And then they have, that's the parent company. Below it, they have the DTC, which is like, they're kind of like the scorekeeper for the US markets. It's the subsidiary. So you have the parent company, the DTCC, they have the master records. They're like the infrastructure behind. And then you have the DTC, which is the scorekeeper for US markets. It's the subsidiary of the parent company. And it actually holds custody of the stocks, the bonds, the ETFs. It keeps the official ledger. Like when you go into your bank and you see a ledger of like in your banking statement, that's all it is. You see a ledger and you see numbers like, oh, here's my account balance, right? So it holds the ledger for stocks, bonds, and ETFs. So this organization holds extreme power, okay? So the DTCC has been publicly moving deeper into tokenization infrastructure, including statements about authorization to offer tokenization services for a certain DTC custodied assets. So a DTC custodied asset is a stock, a bond, or an ETF. And they recently received a no action letter from the SEC, which is basically giving them permission to go digital. Okay. So in very simple terms, if you look at this, like you basically have the DTCC, they're going to tokenize these assets, and they're partnering with a company called Canton so they can take traditional Wall Street assets like stocks and bonds, and they can actually put them on the blockchain while staying regulated. So in layman's terms, you have this huge network, right? DTCC, this company, they're like the scorekeeper, and they keep the score for like all the stocks, all the bonds, all the ETFs that are traded, right? So they have the ledger that shows exactly what's going on. They clear it, they settle it, all of that. And they're partnering up with Canton, who's in the digital asset world. And they're saying, we will totally recognize digital assets now. We just need to be the ones to regulate it. We need to be the ones to keep score. And this is a huge freaking move, like huge move, huge. So they too are recognizing that the digital asset world is real. They're getting in the game. They're forming partnerships because it is inevitable. And if you're these large institutions and you think like them, they want speed, they want efficiency, they want to make more money. If they get in the game of digital assets, they can make more money doing that because now they don't just have two streams of people who are playing in the Wall Street world, which is, traditional finance, buy stocks and bonds. Now they're going to have people playing on the blockchain, which is people buying stocks and bonds that are tokenized, wrapped up in a token, and they can own it on the blockchain, and they can trade it 24/7, 365, and they can send it to a friend in seconds. And you can cross borders in terms of these larger companies. Like you're no longer limited. If I'm a Fidelity or if I'm a BlackRock, I'm not limited to my jurisdiction anymore when assets are tokenized. I can literally play globally across the world in seconds and not have limitations through the regulations that regulate stocks and bonds. Now I'm going to play in the regulation game of what's happening with regulation for the digital asset world. And so we know that all these laws that are now being passed, there's good news coming down the pike with this, of what's happening with the new regulation coming in that should be passed very, very soon. And so all of this is creating the perfect storm for the fact that crypto, digital assets are the future. There's no denying that whatsoever. Okay. If you look at like Wayne Gretzky always used to say, skate to where the puck is going, not where it's at. Like where the puck is at right now is in traditional finance. Where the puck is going is into digital finance, and it's there, and it's already there. The rest of the world hasn't woken up to it, but the large financial institutions have, and they're making moves right now because they don't want to be left behind. And being left behind means they're going to lose a tremendous amount of money if they're left behind. So that is big, big news with the DTCC. If you want to simplify what they are, they're basically the scorekeeper for digital assets. They keep the ledger for it. Okay. So that is very, very fascinating news. And then you talk about staking for BM&R. Like, why could that matter? BM&R has said it plans to commence Ethereum staking with its Made in America Validator Network, MAVAN, in early calendar 2026. So if they start staking, we all of a sudden see a company that changes, where it's no longer a company that just holds Ethereum on the balance sheet. It's a company that now holds Ethereum that's going to generate income and cash flow on a daily basis. And that income and cash flow, if you do the math, let's say they own 13 billion. Well, they own about $1 billion of cash on the balance sheet. They own the rest in Ethereum, some in Bitcoin, but mostly the rest in Ethereum. So let's say they have $12 billion of Ethereum, and they get a 3% staking fee on that. That's $360 million of income coming into the company just over and over and over again. As their ETH stake grows to $20 billion, that's 600 million. And depending on what the payout of, it's a 3% staking fee or 4%, you're looking between 600 million and $800 million coming in. Do you think Wall Street's going to pay attention to a company that not only holds the infrastructure of the blockchain on their balance sheet, which is Ethereum, but also now has income generated? It's a totally different game. Now they're living in two different worlds. When you look at MSTR, MSTR lives in the world, they hold Bitcoin on their balance sheet. There's no income generated from that. Okay, the store of value. When you look at Ethereum or BM&R holding Ethereum on the balance sheet, not only are they holding this digital asset on their balance sheet, which has extreme value, we know, but now they're creating income for the company that's coming in. And so that's kind of like how Wall Street looks at and values companies through the traditional lens. So now they're going to have two lenses to look through: Ethereum on the balance sheet and staking income coming in, which is going to turn some heads. It's going to turn some heads in a very, very big way. So this is fascinating stuff of what's going on and what staking could mean over the long term. And it's a big deal. Now, when you look at MNAV expansion, people willing to pay a premium for the stock in the marketplace, the MNAV is not very high right now. It's around, when times are decent, the MNAV is about around 1.3, which means the market's willing to pay a 30% premium over the net asset value of their Ethereum. And then there's times when it goes up bullish, it will eventually, I think, go to 1.5, 1.6 or higher. We've seen this with MSTR in the past during bullish times. And when you're in bearish times, which it's no doubt that we've been in bearish times over the last year. I mean, this has not been a bullish 2025 at all. Okay. It's not been bullish. I'm not saying we went into a complete bear cycle, but it's not been a bullish 2025. All right. So what's going to happen in 2026? Basically, we're in a brand new cycle. The old 4-year cycle is dead. Nobody knows what's going to happen in 2026. So all we can do is zoom out and look at the fundamentals and say, what do I believe with Ethereum? What do I believe with Bitcoin? And then if I'm a holder of BM&R that holds Ethereum, what do I believe about that? If I'm a holder of MSTR that holds Bitcoin, what do I believe about that? Those are really the 4 things that I like to cover on this channel, which is BM&R, MSTR, Bitcoin, and Ethereum. And then other interesting news in the financial markets. So that's basically the gist of what's going on. So in like full like summary of what we talked about, right? BM&R, holds a massive ETH position. I don't think anybody expected that in 5 months or 6 months, they would accumulate the amount of supply of Ethereum that MSTR has accumulated in Bitcoin. For MSTR, it took MSTR 5 years to accumulate 3% of the supply of Bitcoin. It took BM&R 5 months to accumulate 3% of the supply of Ethereum. Think about that. The acceleration of that is like the X factor on that is massive. The speed of accumulation is massive. So if you sit there and you just look at the price of BM&R and the ups and downs and all of that, and you don't zoom out and look at the bigger picture, clearly it's easy to get swayed and be disrupted by the drops in the price. We all get that way. When we saw it go down to 25, it was like a gut-wrenching, stomach-twisting freaking mark. But if you know the fundamentals and you believe in the long-term fundamentals, not once did I doubt the long-term fundamentals of BM&R and Ethereum. And I think that's the important viewpoint to have right now in uncertain times. Okay, I'm not saying buy the stock. I'm saying the important viewpoint is that, to zoom out and look at the long term of BM&R, which is incredibly bullish. Think about it. MSTR, 3% of supply of Bitcoin, more than that actually. BM&R, over 3% of the supply of Ethereum. 5 months for BM&R, 5 years for MSTR. Huge. Now, I'm an MSTR holder. I'm going to continue to hold them over the next 4 or 5 years and just hold the stock. But look at that comparable data. Huge. Huge. All right. So that's a big, big, big deal. All right. So if you want to get my book Money Game, you can grab it down below. If you want to learn more about MSTR and BM&R, it's all in there. I also talk about traditional finance. I'm giving you the book for free as well, so you can go snag the book for free. But I think it's really important to take a look at, if you're going to look at things like BM&R, MSTR, Bitcoin, Ethereum, it's also important to look at traditional finance and understand the world through traditional finance. And I've been talking about on the show for a while, like what it really takes to get ahead in this world. Like it takes more than 12% just to keep your head above water. So when you see, S&P 500 returns over the last 3 years that have been 20% or so, that wasn't the norm 4, 5, 6 years ago. When you look at the printing of money that took place during COVID, we printed about 40% more money, 40% of like all the money in circulation during COVID. So like the money supply increased by almost 40%, call it 30% and change. Okay. And so that amount of money printed into the economy creates something that's called asset inflation. So when you look at numbers that come out by the Fed and they talk about 3% inflation, it's not that those numbers are wrong. It just doesn't tell the whole story. So what you have to look at when investing today, and I've written entirely about traditional finance in my book because I lived in traditional finance for about 13 years. I worked for a very large institution. I was the number 5 partner in the company for years. And I understood the inside of how these companies actually work. And so when you understand that inflation or the printing of money pushes up the prices of assets, meaning pushes up the housing prices. So if you were living through the time and you saw housing prices go up, if you didn't own a house at the time and you went to go buy a house 3, 4, 5 years later, or even a couple years later, or even during COVID, prices went up drastically. And so you have to take into account asset inflation, which isn't 3% on houses, it's more. So you have to look at that. Also, you look at things like if you're sending your kid to college and how much college has increased over the last several decades. College doesn't go up by 3%, it goes up by way more. So when you factor in money printing, which clearly debases the value of your currency, when you factor in asset inflation of houses going up, of college tuitions going up, when you factor in taxes, and you look at all of this, like one needs to really make 12% at a minimum just to keep their head above water without drowning. All right. So that's why S&P 500 has become kind of the benchmark, but 20% sounds amazing. But when you really think about it, it's kind of like a net 8% when you take into account all those other factors. So if I'm flying 20 miles per hour into the future and I got a headwind coming at me with taxes and inflation and asset inflation of 12%, and not to mention management fees. If you have somebody who's managing your money and you have management fees, there's more expenses and more of a headwind, stopping you from your goals. Okay. So it doesn't mean you shouldn't have a money manager if you don't know a lot about, investments and things like that. It just should mean that you should know what they're doing and you should know what traditional investments are. Most of the money managers don't outperform the S&P 500. In fact, in 2025, 80% of the money managers did not outperform the S&P 500. So that means people who are paying the fund managers to invest the money for them, like 20% beat it. That's not a very good statistic. All right. So that's the data that's going on. So in summary, let's summarize what we covered so far today. So BM&R clearly has a massive ETH position. They'll eventually get to 5%. Wall Street is, they're tokenizing assets. BlackRock, PayPal, Deutsche Bank is writing papers on it and talking about publicly that they're going to go on there. You have so many different institutions that are looking at this or are already doing this. You have the DTCC, which we talked about, which is like the scorekeeper for Wall Street. It basically clears trades, settles trades for Wall Street, keeps the books. So all the trades that are made on stocks and bonds are done through the DTCC. They have now partnered with Canton. And by partnering with Canton, which is in the digital world, they're going to allow the moving of assets onto the blockchain. And they're saying basically, hey, we're totally fine if money goes onto the blockchain. We will acknowledge digital assets, but we need to keep score. Just like we keep score for stocks and bonds and ETFs, we're going to keep score in the digital world, and we're going to be the scorekeeper. And so they're creating major partnerships to do this. There's the strike price for the people who have call options at $40. Lots of open call interest at a $40 price point. So the January 16th date that I talked about earlier about BM&R potentially moving to the $40 range is because a lot of call interest is there right now. And so like it's heavy. So we'll see what happens if the price starts creeping up towards $40. The people who sold them the call options will eventually, have to buy the stock, so that if somebody exercises the call options and they want to buy BM&R at $40, $41, $42, the person who sold them the call options needs to have the stock to deliver to them. And so to do that, they have to buy the stock to cover, and that will push the pricing up. And that's what usually happens. So we'll see if that happens as well. So that's the data for today. Just watch and see what's happening in the short term. And in the long run, I wanted to give you the fundamentals. Again, if you are interested in the content I'm sharing, you can subscribe to the channel. You can like the channel. And also, if you want to go grab my book, it's down below with a free video on how I'm trading on a daily basis. We have a whole community of people that are trading. People are brand new, have never traded before, and they're learning. Lots of great success stories on it. My philosophy is if you're going to trade with paper first, because you will face losses and you need to learn the game. And then eventually, one's trading, one can trade with real money, hypothetically. Okay. All right. I hope this serves you guys. Go spread the word on the book. I'm really proud of it. Created it. It's free. You can grab it, give it to a friend. It's also on the proper gradient so that when you share it with somebody, it doesn't go right into Bitcoin or right into BM&R or right into Ethereum. It literally goes into the problem with traditional finance, the problem with money printing. It talks about the Fed, and it really gives people the background of what traditional finance is. And then I slowly introduce them into Bitcoin, Ethereum, MSTR, and BMNR. All right. Hope it serves you. It's great to see you guys again. Having a tremendous rest of the day. And I will see you very, very, very soon. Okay.